Hello, hello. Trading has closed on the 30th of March, 2023. We'll start with our disclaimer. Remind people about Rod David's free access to his trading room. Go over our calls from yesterday and then make some predictions. It's my trading plan for tomorrow, the end of the first quarter, March 31st. 2023. Remember, my calls can be completely wrong. All trades should be at your own risk. Tomorrow's your last chance to watch a professional trader in action. Watch his analysis. See if his work is compatible with your trading style. No charge, no registration, no credit card. All you have to do is you have to type this in and watch. I tried to make a link in the blurb, and YouTube just gave me a whole lot of trouble, and I finally gave up. So you'll have to type this out yourself. Well, we called for the pattern with the early high, which is this, and tomorrow should have the early low. I was pretty enthusiastic after yesterday's trade, but I'm a lot less enthusiastic after today's. Let's go over the MEJT signals first, and then we'll go over why this isn't a very good pattern unless we gap and take out this high fast. Well, during the day, MEJT gave an ultimate buy signal. That certainly worked. Here it gave an ultimate sell signal, but gave the higher target as well. We got enough to satisfy the ultimate sell. MEJT said it wouldn't stick. It didn't. Now MEJT says this rally won't stick. Gives us a target of 4,042.27. Unless we gap up smartly, that's my call. We gapped up, hit a higher high, and as this line shows, we closed under all intraday highs. It's not good. So either you gap and promptly overtake this high, or we see lower prices. It doesn't guarantee a lower close, but that's not the kind of action you want to see after yesterday's breakout. Now, the idea was that somewhere in here, we're going to make an ABC. And it could have been this ABC for here. This could be A, this could be B, this could be C. There are any number of ways to count it. But let's look at one way starting from this low on a different chart. If here's the October low, you can count this as A, you can count this as B, and you can count this as C. C and A have a good fib relationship. We completed an ABC today with C equal to A, and if you look at B, you can form an A, B, C, and all the fibs work. Not only that, if you draw a Fibonacci grid on the last leg down, you get a direct hit at the 23.6, a direct hit at the 61.8, a direct hit at the 38.2, and today you got a direct hit on the 50. So these are all resistance areas. It isn't the only resistance. The brown lines here are prior MEJT targets. When you come this close, you'd like to see them print, but they're resistance, and there's no law that says they have to print. These are prior FOMC announcements in green. You can see this one here. You can see this one here. Notice how we use that as support here and resistance here. Now the idea we had was that you have a three-leg whipsaw after last week's FOMC announcement. But as I said yesterday, that could have played out initially. It was only the breakout over this line, which reinstated the higher price targets. And this is pretty weak action today, and those higher targets might not work. What you really have to do is clear all this resistance and clear it pretty fast. And if that's the right count, and if this Fibonacci resistance means anything, it's possible, but it's not going to be easy. Bulls are really going to have to gap up and clear today's high, unless they want to see lower prices. Well, tomorrow's pattern has early low, doesn't mean you won't gap up. Typically it's a rally day with a high in the final hour, but should it be weak instead, the more weakness should follow in subsequent days. There's a lower MEJT target. Unless we gap up smartly, the rules call for it to print. We gapped up to, but not through, strong resistance. If the rally's to continue unabated, then we should gap over today's high, preferably over all that resistance. The overhead resistance comes from the Fibonacci grid, old MEJT targets, and the old FOMC announcement prices. It's just not going to be easy to clear resistance like that. There's early weakness instead that could have a lot of follow-through. There's a wave count compatible with this leg of the rally being over, and there's a timing system of someone else, which has today as a significant change in trend day. So we have a lower target for tomorrow, 4,042.27. We don't gap up, that's my call. But if we drop early, and particularly if there's a strong drop early, there's a good chance, a very good chance, this marks the end of the leg up and we're going to start a big leg down. This was not good action today, but the whole idea gets killed. We gap up here, and if the market wants to continue higher, which we don't know yet, that shouldn't be that hard to do. So gap up here and the rally continues, move down sharply, and this is a great candidate for its end. Tomorrow has the early low. I think the early trade is really going to be telling tomorrow, and that is today's call.